Kevin, thank you for joining us. You just heard Joanna there making the case for bonds, the 2-year above 4%. You can certainly get yield in the bond market. So tell us why stocks are a better idea right now for investors.
Sure, Seema. We see two particular tailwinds lifting stock prices higher by the end of the fourth quarter of this year. First, we believe that the Fed will, in fact, turn less hawkish, not dovish, certainly not dovish, but less hawkish in November and December, perhaps raising by only 50 basis points in November and only 25 basis points in December. If they do, that would signal to the market that perhaps we passed peak hawkishness and also hit peak inflation, given that the Fed wouldn't cut back on the magnitude of their rate hikes unless inflation was starting to moderate. If, in fact, that occurs, we anticipate more money coming back off the sideline and starting to go into those areas of the stock market that have been beaten up the most thus far this year in 2022.
Kevin, what gives you confidence that the Fed will be less hawkish? Because the takeaway from the press conference with Jay Powell yesterday was that the concept of pain, he certainly stressed that point, that it will be painful for investors and households as he tries to tackle inflation?
My confidence in this outlook is my lack of confidence in the Federal Reserve. Think back to earlier this year when they suggested that inflation was transitory. It certainly has not. Think back to May when they told us that no rate hikes above 50 basis points were under consideration. Well, guess what? We've now had 3 consecutive rate hikes of 75 basis points each. They told us that they were going to raise rates on a gradual basis. That certainly has not been the case this year. So why would we now start to believe that they're going to follow the script that they suggested yesterday? I do believe they're trying to talk down inflation in addition to raising short-term rates and influencing longer-term rates by reducing the size of their balance sheet. But again, the economy continues to slow. We've met the technical definition of recession, and how much further can the Fed go without risking pushing the economy into a deeper and more severe recession than would have otherwise occurred on its own, Seema.
Shepard Smith here. Thanks for watching CNBC on YouTube.